get right into it. So he's the CEO here at Forest Park. His presentation, like we talked about, he's going to review. This is completely of all value add. I mean, these guys have some of the best connections, both on the retail side and institutional. So this is kind of what we've been looking for. I mean, when as a team here trading around on traditional retail platforms, I mean, that's just not really an institutional way to trade. So this will be good. Other than that, I might just mention a few things about us for those that are new at the end. But other than that, Justin, you can go ahead and I'll pass this over to you. Or Rebates, do you know how to switch me over?
Good morning, guys. Can you see my screen?
Looks good on my end. Yep.
Okay, very good. Well, thank you so much for the introduction, and I appreciate the opportunity to speak to your group here and talk a little bit about who we are, what we do, and try to help some of your clients and followers make smarter brokerage decisions. As you mentioned, my name is Justin Hertzberg. I'm the CEO of Forest Park FX, and today we're going to be doing a short presentation on what we consider to be the top 6 mistakes that traders make in choosing an FX broker. Just before we jump too far in, I'm very informal, very comfortable speaking, so if there are any questions that are coming in from the audience, feel free to interrupt me with those. I'm happy to go off on any tangents and really address the questions that are pertinent and relevant to what your clients are dealing with right now, so don't hesitate to interrupt me. Just before we get into it, brief risk disclaimer here that's not sure why that's happening. Apologies. Brief risk disclaimer that we're required by regulation to provide, but it is important for all clients to know that there is risk in trading. You may lose more than you deposit with a broker, and it's just one of those things that you should take seriously. Trading is a profession like any other. It takes time, energy, focus, dedication, and discipline to be successful, and it's important to understand the risks before you delve in. A little bit of background on who I am. I obtained a philosophy degree from Emory University, and like most philosophy majors, I did the only thing that you can do with a philosophy degree. I went to law school and went to the University of Miami, where I got a law degree and an MBA with a concentration in finance, and actually started my career in a very different capacity as a securities and commercial litigator for a large Florida firm. Realized quickly that that wasn't the right career path for me, and was looking for something a little bit more entrepreneurial, and ultimately found my way into working for an FX prop firm that was run by a former FX fund manager who at his peak had about $750 million in assets under management. And it was a great experience. It was my first exposure to trading, to the markets, to the brokerage business, and really became interested in it. And from there, I worked in several different positions with a number of different firms, gaining experience as a trader, as an in-house counsel, as head of business development, and a few other roles, wearing a few other hats. And after I got enough experience and confidence to strike out on my own, I launched Forest Park FX in March of 2013 as a CFTC registered NFA member introducing brokerage firm. And actually just earlier this year, we also became registered with a UK company that's regulated by the FCA to operate in a very similar capacity. And just a little bit about what we do. We have a very unique business model that is broker agnostic and client centric. And we try to provide solutions to FX traders, retail and institutional, in the US and abroad, with a focus on really these 4 ideals. The first is we try to help clients reduce their cost of trading through cashback rebates or negotiated lower spreads or commissions. So we provide pure, tangible, quantifiable value add in that way. We like to connect and try to connect traders with the right platforms and technology for their specific trading demands. That may be taking into consideration all the different platforms, either proprietary or third party, that are available. using outside tools like a VPS or plugins or um, indicators or custom scripts or API connections and things of that sort. Um, the third point is sort of going back to my advocacy days as a lawyer, but in any difference of opinion, we represent our client as opposed to the broker. So if you have an issue with your broker, whether it's regarding a bad trade fill or a platform issue or some sort of deposit or withdrawal problem or anything in between or outside of that, we represent your interests. So it's a helpful thing to have an advocate and an ally on your side, because by yourself you're just one voice. You're one of thousands of traders with a broker. But if you have our support when we have long-standing relationships with these brokers and hundreds of clients with them, it gives you a much stronger voice, and we're able to escalate your issues to the right person who can make more of a business decision to placate us more than you, so we can help to accomplish some things and represent your interests better than you likely can on your own. And the last point, and the one that's most relevant to this conversation, is helping to position traders to make better brokerage decisions. And we'll talk about that today in the form of what are the 6 mistakes that we see traders typically make in choosing a broker. And I'll go through them quickly here, but we'll go into each one in a little bit of depth. And again, if anyone has any questions, feel free to chime in. Happy to go back a slide or two, talk about something unrelated, so don't hesitate to reach out. But here are the 6 things that we've noticed, and this is over years of working with thousands of clients. The first thing that we see is brokers assuming that all brokers are good, all brokers are benevolent, all brokers are fair, and they go with a broker that is wholly unregulated, set up in some jurisdiction where you would maybe want a vacation but never want to bring a lawsuit if something went bad, where regulators aren't holding the broker's feet to the fire to ensure fair and equitable trading environments, where your funds aren't protected. This is one of the biggest issues that we see. I hear the horrible nightmare stories all the time about clients putting money with a broker only to never get withdrawals, never getting quality fills, never getting any sort of customer service to their questions, and it's really something to be avoided. Number 2 is believing everything you read. We have to go into this with eyes wide open. Everyone has an agenda. Even if you go to some of the so-called broker agnostic forums out there, they're not really broker agnostic in our opinion. Their ability to operate is funded by marketing dollars, people who are putting up banner ads on their website and being supported by the brokers that are hoping to get traffic from visitors to that site. So everyone has an agenda. You have to think critically. Number 3 is not fully understanding pricing and execution models. This is one that's a bit more subtle and perhaps takes a bit more time to fully understand, especially for newer traders. But you have to know if your broker is a non-dealing desk broker, a dealing desk broker, a market maker. Are they pricing you with raw spreads plus commission? Are they pricing you with all-in spreads? What's really happening on the back end when you send your order through? And it's important to know that, especially when you take it into consideration with a particular strategy that you might be looking to deploy. Number 4 is using a platform for the wrong reasons. There are a lot of people who will tell you you absolutely must use platform X or Y or Z. And in my opinion, that's not really the right way to look at it. I think you use a platform that you're comfortable with, that you have some familiarity with, that you'll be able to navigate quickly in the event of a major market move, so that you don't hit the wrong button, fat finger a trade, and put yourself in a position where you start to panic. Number 5 is putting a good strategy in a bad environment. One of the underlying theses for our business is that not every broker is right for every trader and every strategy. And it's important to understand how your strategy pairs up against a particular broker taking into account a bunch of variables, including their pricing and execution models and others. And we'll talk about that a little bit further. And number 6 is sort of a self-interested mistake, but it's central to what we do, and the value that I believe we add is not using a value-adding introducing broker. Basically trying to figure this out on your own without seeing if there might be a way to expedite your learning curve, find the right brokers, and avoid some of these pitfalls by working with a firm like Forest Park. So first one here, choosing an unregulated broker. And I probably say this line to clients maybe 30 to 40 times a month who ask about working with some of these unregulated brokers. And this is the line I use constantly and will continue to use. Return of capital is more important than return on capital. And it is not a small distinction. It is a huge distinction. And we're seeing that right now. I don't know if anyone has read, but the CFTC has recently filed suit against a broker called Talenex. This was an offshore broker, an unregulated broker that was soliciting and accepting U.S. clients. And now that broker is directly in the crosshairs of the U.S. government and is going to be in a world of pain. And if you were a client that happened to have funds with them, you are now at risk of not getting those funds out, because this is the type of action that could cripple a firm or could cause its directors to basically withdraw all the funds in their accounts, client funds and their own operating funds, and disappear. You just don't know, but you don't need to take that risk. Regulation is there for your protection. As annoying as some of the regulations are, like the lower leverage, the no hedging, the FIFO rules that are in place, maybe you don't agree with some of them, maybe they interfere with the way that you would like to trade, but the regulation is there for your protection. Working with brokers that have gone through great scrutiny just to get set up, go through regular audits, have net capital requirements, have client fund rules. Those are the things that are there for you. They're not there to protect the broker. They're not there to make your trading less profitable. They're there to protect you in a worst case scenario. And it is something that we strongly encourage our clients to take into consideration in choosing a broker, because again, return of capital is far more important than return on capital. Number 2, and again, believing everything you read, and I think this bullet point has become more and more relevant these days with the whole talk about fake news going around in the world. But fake news didn't start with Facebook and the Trump administration. It's been around a long time. And I mentioned a moment ago that there are a number of websites out there that pretend to fairly and critically evaluate brokers and try to help you. But the fact of the matter is, there is an agenda. They do screen and select which posts get made. Sometimes they will only post positives about a particular broker, perhaps if that broker is paying for ad space. In other cases, they will only post negative posts about a broker if that broker is not marketing with them. We've seen some very underhanded things with some of these sites. It's important to, again, go in with eyes wide open, think critically, do your own research, do some due diligence, ask someone that might know better than you, but just don't read everything and believe it blindly. It's important, like anything else, to think critically, to make sure that you are not, taken for a scam, or you are not being funneled into a brokerage solution that is not going to serve your interest. It's going to serve someone else's interest. The third one here, not fully understanding pricing and execution models. And again, I mentioned this a moment ago, but I'll go through a couple of examples just to illustrate the difference. And I'll use some of the bigger name brokers that perhaps people are familiar with. An all-in spread is basically a broker that only shows you one cost in your trading, and that cost is purely the difference between the bid and the offer. And a good example of this would be Forex.com or Gain Capital, as you might know them. They have been around for 20 plus years. They're one of the biggest and strongest names in FX, and they offer an all-in spread. The only cost that you pay, aside from swaps, which are a different conversation for a different day, are the differences between the bid and the offer. This is in comparison to, what some of you might hear of as ECN style brokers or non-dealing desk brokers, where they offer you a raw spread plus commission. And an example of this, for those that have been trading for at least a couple months, would be, let's say on the US side, it would have been FXCM had an offering like this. On the non-US side, we could talk about, say, a Pepperstone or IC Markets or a firm like that, where they offer you a raw interbank market spread that they're getting from their liquidity providers with no markup on it. And then the broker charges you a commission. And the commission is where the broker makes his money. The broker doesn't make the money from the spread. And this typically results in you seeing very, very low spreads of maybe 0.1 to 0.3 in the euro dollar, but you'll pay a commission on every trade. And it's important to understand the distinctions between the two. It's important to also understand which pricing model will work best for a particular strategy. And again, those are the types of things that we can help clients with. The other is the execution model, and you've probably heard some of this before, dealing desk versus non-dealing desk. A dealing desk is where the broker generally acts as the counterparty to your trades, meaning that if you decide to buy the euro, it's the broker that sells it to you. And the broker then decides what it wants to do with that short euro position. They can either hold it and hope or expect that you'll lose money on your trade, or they can offset it against other clients' trades, or they can offset it in the interbank market. But a dealing desk broker tends to operate with a higher risk tolerance and tries to, in a sense, make money from client losses. It doesn't mean that they're specifically gunning for you as an individual trader. It just means that they are looking at taking risk against their traders and feeling positively that they can manage that risk to make money. There is a stigma about dealing desks, which in some instances is true, in some instances is false. The stigma is that your broker is actively trading against you. With some of these unregulated brokers or smaller brokers in some lesser jurisdictions, that is the case. They are 100% fully gunning for you. If you are working with a reputable, regulated broker that happens to operate a dealing desk, that is most likely not the case. They are not. There is no consciousness about what John or Judy or Sam is doing in their account. They are taking the other side of your trade and taking the other side of thousands of other trades, and they are managing that risk in the aggregate, and they feel that they can effectively manage that risk to make money. So it doesn't mean that a dealing desk is per se bad. It will depend somewhat on the broker, but in some instances a dealing desk can work to your advantage, especially if you are looking for instant execution on your trades, either around volatile times or you're trading in very large size. Dealing desks tend to be the right fit for that type of trading style. A non-dealing desk broker is one that just passes through the liquidity, passes through your order flow to the interbank market. The broker itself is not taking risk. They're not taking the other side of your trade. They're just acting as a conduit or a facilitator for you to find someone on the other side of your trade. And in exchange for providing this service, they charge you typically a commission or a markup on the spread, and that's how they make their money. Dealing desks tend to work better for clients who are more price sensitive. And the reason for that is because the broker is not taking risk, they don't have to pad their costs of trading as much as a dealing desk broker, which is taking risk. And so you tend to get slightly lower costs of trading with a non-dealing desk broker. And the third one here is a saying that I have, and I use a lot in a lot of different facets of life, but life is long, don't rush in. And these things that we're talking about here in number 3 are somewhat granular and perhaps difficult to understand for a newer trader, but they are important and they can have a profound difference on the profitability of your trading strategy. And so it's important to take a minute to do some reading, to ask some questions to people who know, to understand the differences and not just rush into broker X or broker Y, but to, again, think critically and try to find the right fit for the right strategy. Number 4 is using a platform for the wrong reasons. And I'm probably in the minority in this, but people are somewhat fanatical about trading platforms. There's only one platform that they can use, that anyone could use. How anyone could use a different platform is almost, blasphemous, and it's, to me, it's almost comical, because platforms are representations of data. For the most part, there is about 99% overlap between different platforms. They're showing you the same data. They have virtually all of the same technical indicators and tools that you can employ. And for me, it's about comfort. It's about putting the substance of a platform over the form. And I always look to worst case scenario situations. In virtually all instances, it really doesn't matter what platform you're using, except for when something happens and you need to act quickly. You need to be familiar with your platform. You need to have a comfort level about how to navigate between all the different screens, pull up your orders, modify an order, execute a trade quickly, do something at market, watch for some sort of movement, update your charts, etc., all in a very short window of time. And you need to be comfortable with the platform for that. And so for me, don't choose a platform because someone else told you to choose a platform. If all things are equal, go with the platform that you are more comfortable with, that you feel resonates more with the way that you trade and that you think. And I draw the analogy to using a computer. Personally, I'm a PC guy and my wife is a Mac person. I can't figure out how to use a Mac for the life of me, and she will never go back to using a PC. She's comfortable with hers, I'm comfortable with mine, and we both make it work to our benefit despite using completely different operating systems. And that's really something that's true in trading platforms. Use the platform that you're comfortable with, that you can navigate, so that when push comes to shove, when worse comes to worse, you can navigate and do the things that you need to do without fumbling, without panicking, without hitting the wrong button. And just before I jump to the final two, I just want to ask if there's any questions, Jason and company. If you guys want to interrupt me, feel free. I don't want to gloss over something too fast or ignore any questions from anyone in the audience. So again, you can interrupt me mid-sentence if you like. Number 5 here is putting a good strategy in a bad environment. And this one is not so obvious, especially to newer traders, but the concept of don't put a round peg in a square hole really applies in trading. And it's one of the nuanced differences where I think a firm like ours adds a lot of value, because we spend a lot of time trying to understand the different brokers with which we associate. And we also have a good deal of understanding about the different types of strategies that traders employ. And I would advise traders to try to do the same analysis. Try to figure out, okay, what is my strategy? How would I describe it? Is it high frequency? Is it intraday? Is it scalping? Is it swing trading? Is it position trading? Am I trading during liquid times? Am I trading during illiquid times? Am I trading liquid pairs? Am I, let's see, what are some of the variables to consider? Am I exposed during news, or am I exposed during rollover? How does swap affect my strategy? There's lots of different considerations, and I can go on and on. I'm just trying to rattle off some off the top of my head, but traders need to understand their strategy. And we see it very often where people take a course for a day, a week. They buy some strategy off the shelf from some vendor on the web, and they just put it to work. They have no idea what its strengths are. They have no idea what its weaknesses are. They just keep they just put it out there with real money without understanding the strengths, the weaknesses, the vulnerabilities, and whether it will work better with broker X or Y or Z. And it's really important to understand your strategy, understand where it will be best suited, and you have to consider all the factors. There are more than the ones that I've just rattled off, but for clients that are trying to figure this out, navigate the brokerage landscape, and find the right fit for their strategy, we're more than happy to help. But just don't go about it blindly. If you're going to do anything, just do the research, spend a little bit of time. And remember, life is long. You don't have to rush into these things. So even if you never talk to me or Trent at Forest Park or a firm that may be similarly situated, just do yourself a service and spend a little bit of time researching who you're getting into bed with, and do a little bit of time researching what your strategy is all about and understanding where it will work best and where it won't. And number 6, again, it's the quasi self-serving bullet point here. But I think it is important for traders to use a value-adding introducing broker. The brokers themselves have biases. If you call up, even the best of them, a Forex.com, an Oanda, and you have questions, at the end of the day, they're not going to tell you to go and work with XYZ broker. They really want you to work with them. And so they're going to try to steer conversations to get you to open an account with them and give you the answers that you want to hear, which may not necessarily be the most objective responses to your questions. So it's important to seek objective analysis. Try to find objective sources of information, unbiased, broker agnostic sources, so that you can find and receive a fair evaluation that doesn't just take into account the quality of the broker, but takes into account what it is that you're looking to accomplish, and then tries to make a happy marriage between your strategy and the broker. And you should, to the extent possible, avail yourself of the experience, strong relationships, and added value of a firm like Forest Park that has been doing this a long time, that has a lot of credibility and operates with a high level of integrity, and really does put its clients above its own self-interest, because we'd rather establish pardon the noise in the background, a long-standing relationship with you and help you to ascend your own learning curve in trading, and hopefully, earn your trust and perhaps a referral or two over time. And just some of the benefits of working with Forest Park. Again, we are broker agnostic. We work with firms that are globally regulated, extremely reputable, and our idea is not to put a round peg in a square hole, but it's to try to find the exact right fit for what it is that you're looking to do. Again, we offer cashback rebates on every trade that you place. It's a way for us to help you reduce your cost of trading below what you would otherwise pay by going to the broker directly, and I'll talk about that a little bit more briefly. We provide ongoing broker, platform, legal, regulatory, and general industry support. So for any questions that you have outside of deciding whether or not to buy or sell, at what price and why, we're your go-to resource. We provide that to you as a free resource. We support you for the life of your account with us, and we will genuinely try to do everything we can to put you in a position to succeed. And lastly, this kind of goes hand in hand with supporting you, but you can leverage us for access to tools and resources and technology that might benefit you in your trading. You may want us to evaluate a tool that you've been looking at, and we'll give you a critical and constructive response to whether or not we feel it will be helpful. You can also come to us and say, hey, I need this, or I'm looking to code an algorithm that I have in my head. Can you help me? And the answer is, of course we can. We work with competent programmers that can help you to do these things, and we can help with a variety of other issues and questions and challenges that you're facing with regard to your trading account and your strategy. And just a brief slide here about exactly what the cashback rebates are and how they work. I mentioned we work with a number of regulated and reputable brokers from around the world. Um, and one of the things that makes us different as an introducing broker is that we don't mark up your cost of trading in any way, and we don't just act as a mere pass through. We are value adding from start to finish. Unlike a lot of other introducing brokers that actually have either hidden costs or markups that actually make it less cost effective for you to work with them than if you went to the broker directly. We actually make it cheaper for you to trade at your favorite broker by going through us than if you went to that broker directly. And the infographic here on the right actually kind of illustrates how that would work. And I know the font might be a little bit small, so anyone who might want to see this, I'm happy to email it to you and you can review it afterward. But on the left, it goes through a typical Forex account and the account opening process. And the steps are, for instance, you would go to forex.com, you would open up an account, you choose your platform, and let's assume for purposes of this illustration that you fund your account with $10,000. And you log in and you see your euro spreads, and for illustration purposes, let's assume that the spread is 1.7 pips on the euro. And we assume that you trade 2 standard lots on the euro every day. And at the end of the month, let's assume you made $500 in trading profits. And so your equity in your account at the end of the month went from $10,000 to $10,500. But because you went to forex.com directly to open this account, you didn't earn any rebates on your trading. So without rebates, your balance, your equity at the end of the month is $10,500. On the right is what the process would look like if you had come through Forest Park and our cashback rebate program. And the only substantive difference is that instead of going to forex.com directly, you would first go to our website, you would register with us, and then you would be able to follow the prompts to open a forex.com account from the list of our brokers. You would be redirected to forex.com's application page where you would complete all their information. You would choose your platform, you would fund the account also at $10,000, and when you log into your platform, you will see the exact same euro spreads of 1.7 pips. And again, assuming you trade 2 standard lots on the euro every day, and at the end of the month, you're going to have the exact same profitability because the spreads and the trading conditions are exactly the same. We don't interfere or intermediate in any way. And so by going through us to forex.com, you'll still make the same $500 on those exact same trades, and your equity will be $10,500 at the end of the month. But because you came through us in our relationship, you're going to accrue rebates on every trade that you place. And that means that you'll save $6 per day or $126 per month. And after the rebates are paid back to you, the effective equity in your account is now $10,626. So you make an extra $126 for doing exactly the same thing and availing yourself of additional service and support from Forest Park. So just something to help you understand how we can help you at a bare minimum just to save money on the trades that you place. And if anyone is interested in learning more or working with us, here's all of our information. You can visit our website at www.forestparkfx.com. And I've included my contact information here on the right. I've also included our head of sales, Trent Hare, and his contact information. And for those that are in the Slack room, he's active in the Slack room. So if you have any questions about this presentation or otherwise, feel free to reach out to him anytime. He's listening in right now, and he knows this business as well as I do, and would be more than happy to help you. So that's all I have. I really appreciate your time and attention. I hope this was helpful. If anyone does have any questions, again, please don't hesitate to call or email. Trent and I are perhaps the 2 most responsive and available people in the entire FX market. We answer our own phones, we respond to emails immediately, and we are more than happy to help you as needed. So again, please don't hesitate to reach out, and wish you all a lot of luck. Hope you avoid some of the pitfalls that we've seen other traders make. And at this point, I guess I'll turn it back over to Jason and company to take from here.
Great, Justin. Appreciate that. Very professional as always. Great stuff. You guys have any questions? I was just curious, Justin, maybe you want to hit on some of the differences. I think some of my US traders are pretty familiar with, um, some of the points you were making. Is there anything you wanted to touch on as far as maybe my non-US based um, guys and gals? What you guys can help with there also?
Yeah, so the same value add applies for the non-US audience. We work with a much larger set of brokers outside the US because, frankly, there are more, and we've drilled down to find the ones that are regulated, reputable, where we have long-standing working relationships, and have a large book of business with them to help protect us and protect clients. We provide the cashback rebates there as well. We can help clients. Let me see if I can pull up pull this over here, a list of the brokers that we work with, just to show clients some of the options that are available to them. Give me one moment. Let's see if I can pull this across here. But here are some of the brokers that we work with on the non-US side: Alpha Capital Markets, Forex.com, Friedberg Direct, which is FXCM's Canada offering, FXCM, FXDD, FX Pro, IC Markets, Oanda, Pepperstone, and Think Forex. We are constantly evaluating different brokers to see if they meet our stringent criteria as a reputable place for clients to put their money. So we do, from time to time, add a broker or remove a broker from our list. But we can provide a lot of the same services, a lot of the same support. For US and non-US, because I have a strong regulatory and compliance background, we can also help those people who are interested in perhaps becoming introducing brokers themselves or money managers. We can help them to navigate that regulatory environment. Like I said, we are essentially a free resource and pure value add. So for people that do have questions, US or non-US, we can and would be happy to help them.
Okay, that was very good. Looking through some of the comments, I'm checking in the chat room. And Justin, so to continue the dialogue, then I guess I'll get with a lot of individuals on my team. What's kind of some of the next steps then? Do I get with you on that, or is there anything else you want to add to the team? I'm sure some of them are going to be very interested in. I already have a lot of individuals kind of always asking about, hey, which broker should I use, especially the overseas audience. So,
well, I would just, to the extent that you can encourage them to contact me or to contact Trent. Our typical process is not sort of like an assembly line or cookie cutter model. We take a customized approach to each client. So we don't just say, okay, where are you from? Go to this broker. What we really like to do is put together a whole client profile. So we'll ask a bunch of questions. Where do you reside? What platform do you prefer? Tell us a little bit about your strategy. How much capital are you planning to deposit? What brokers are you using now? What's been your experience? What have you found works? What have you found doesn't? And we'll go through a whole host of questions. And the idea is not to pry into anyone's personal finances or usurp their proprietary trading strategy or anything like that. It's to allow us to take in as much information and understand really what their strategy and their trading style is all about, and find them the best possible fit for what they're looking to do. And really that doesn't lend itself to a cookie cutter model. We really like to have a personal relationship with our clients. We encourage our clients to be open and forthcoming and share those things with us, because it's only going to help them if they do. The more we understand, the better we can assist them. So if anyone is interested, US or non-US, again, please have them, encourage them to contact us. Again, our contact details are on the screen, and we'd be more than happy to take them through that consultative approach and figure out what the best home or homes might be for what they're looking to do.
Okay, fantastic. All right. I don't see any more questions on any of the other streams here. I guess that's Justin, thank you so much.
No, my pleasure. Thanks again for the opportunity to speak to your group, and I hope it was helpful. Again, happy to be in touch with you or any of your clients and followers to help them. And best of luck. Good luck with the rest of the trading day.
Appreciate it. Very good stuff, guys. We'll be in touch as always.
Sounds good. Take care.
All right, Trent, we'll talk to you as well, partner.
All right. He's nodding.
Okay.
All right. Take care, guys.
Thanks, Justin.
Bye.
All right, guys. So good stuff. Guys, I was just going to share for those of you who are still on here. Let's just look at this pound yen real quick. I don't know if you guys saw.
I'm going to exit. You can stay on.
Okay, Justin, thanks. For those of you who are just joining, first of all, guys, when we get through this high right here, 140, 145, remember we were talking about that? I just flipped and went long, so this next pullback is viable. But for those that are joining, this is what we do every morning. We trade together, a lot of Forex. Let me just give some background as far as what, some of you are joining. What we're doing is we're talking about our team of traders looking for a home as far as self-directed accounts. So as many of you know, we're in the process of setting up a prop firm. Whether you want to participate in that or not, this is what we were talking about this morning. This is a great way for you to self-direct your account. So I think it's pretty much a no-brainer. I mean, when I trade on the institutional side, there's just so many brokers competing for your business. It just doesn't make sense to go the route with a lot of retail traders do, which is what Justin outlined in that first scenario. You're just calling up, logging in. They're not really going to bat for you as far as making sure all your needs are met. They just want you to open an account, and then there's no value add, there's no cash rebate. So in the professional world, you actually a lot of times would get paid for adding liquidity to the exchanges and placing your bids and offers. You can earn rebates. So there's lots of different ways to interact with brokers, and this is the best solution that I found, that Rebates and I found. But anyway, we'll jump back into the other room. I just wanted to highlight for those that might be new to what we do. You can go to jenkinsrm.com. This is a little bit more about me, our team. I would encourage you to just come in the chat room. It doesn't cost anything. And you can interact with us there. You can reach out to myself or my partner. And then the full access team is what we were speaking about this morning. This is where when we talk about our trading team, that's what this is all about. So that's the group that we're trading together every day. But did you guys have any questions as far as team members go? It's a pretty good presentation, right? They do a good job over there. You guys, okay, I wasn't sure if the chat was live. It's good, right, Alex? All right. Rebates, do you want to go back to the old room? Or you want to keep this one going? It doesn't really matter to me. We could stay. Okay. All right. So guys, here's back to the trading now. So listen, this just happens. This is what a lot of times when you break the bands on the 30-minute, you just have to play some defense. It just is what it is. We were in this downtrend. We got the swing line set up, and then it came right back up above these highs. So now we're back in no man's land, right? So between here and pi, there's a lot of room. So you don't want to get stuck in a scenario where you just keep fighting it on the short side, and then it backs all the way up on you. So the way to play this now, and it was tough to signal because.
Hey Jason, you're showing the website.
Oh,
on the
okay.
screen.
Thanks, partner. Okay. Um, thanks, Rita. So look, here's the 30-minute, guys. This 30-minute here, right? So there's a lot of distance between the break of the bands now and pi. So you don't want to just drag us short and keep fighting this all the way back. The better way is to lean long now and think for a move back to pi. And then if we get a pullback, we're actually going to buy more into this next dip. So you lose a little bit of money. Okay, now we're going to try to make it back the other way. So now we have a wall like this, right? So the next dip is buyable. All right. Did everybody kind of see those signals? I was trying to get in there. Didn't want to distract from what we were doing in the webinar. And then our Euro trade's fine. 15-minute cycle crossed. This is a good place to add on this topping tail. But you guys see how we were in the southern hemisphere before pi was down, and now I mean, so this next pullback, we want to get involved on the long side. We want to buy even more. um, you guys see anything else that's moving? So we got some work to do now on pound yen. That was the swing line that just had no follow through. And then it got above that high, you get above this high. Time to think long now. Does everybody see how the bands are starting to turn? So let's let this 5-minute cycle come back to us. Let this 5-minute cycle come back down. You can nibble long on a piece right now. Keep it small though, because again, this 5-minute cycle can pull back, guys.